Folks, I want to remind you, today's the big day. It's February 27th. It's a Thursday at 1 p.m. I'm hosting a big event. It's called Blitz Trading. It's all about getting into trades moments before the big move occurs and holding them for 24 hours. That means not 2 weeks, not 3 weeks. This is not buy and hold. You get in on Monday, out on Tuesday, in on Tuesday, out on Wednesday, in on Wednesday, out on Thursday. 24 hours. This is not day trading. This is really, really big. It's perfect. It's perfect for today's uncertainty in the markets that we're seeing. It's a simple way to reduce risk. You don't want to miss this. If you haven't reserved your spot yet, do it now. In the time of uncertainty that we're seeing, the volatility we're seeing right now, there's nothing better than getting in and out the next day. It's the best way to trade. It'll lower your risk, it'll increase your profit factor, and most importantly, it'll keep your money in your account instead of in the market just sitting there and doing nothing. So again, it's a great way to trade, especially with the volatility we're seeing. We don't know how long this coronavirus is going to last. Follow the link below. Do it now. Do not delay. Now, I'm just looking at the market. We just had some reports come out, and I'm looking at the market right now. Let me start off with the news. Let me start off with the fundamentals. I wanted to wait a little later to do the report today, but again, here's what we got. We got more cases of coronavirus spreading to more countries, putting further strain on business and supply chain across the world. Folks, I think the capacity in China right now is about 10%. Microsoft just warned that China is hurting them more than expected. That's huge. Airports are, there's issues. There's a crisis developing. And President Trump announced late Wednesday that U.S. was stepping up its effort to combat the virus outbreak as the numbers have surpassed 81,000. Okay, there's some debate about how much money they should give, but no, you guys have nothing to worry about. Vice President Mike Pence is on the case. We'll see how that goes. South Korea reported 334 new cases. Again, things are not looking that great. And that's really what's moving the market right now. I wanted to wait for the report to see. I wanted to see if the market would be moved. But it actually went a little lower after the reports, and the reports were not that bad. So let's start off with durable goods. Expectations were supposed to be down 1.2. We're only down 0.2. Better than expected. Not a lot better than expected, but slightly better than expected. Durable goods are doing fine. The big report, GDP, what did I tell you? 2.1%? It's 2.1%. So, folks, the only reason the Fed would have a reason to lower rates right now would be the coronavirus. The economy is humming along. They may start doing things preemptively, but at 2.1% growth, which is on the upper end of the scale, the truth is anything over 2% is telling us that American economy is humming along. But again, we're seeing warning signs because of this coronavirus. We don't know the impact it'll have. And uncertainty is what drives the markets lower. Finally, we had another report, the jobless claims. The numbers were a little bit off. New claims at 219,000, but honestly, the moving average has been at 209,000. The consensus was 210,000. I wouldn't make too much out of this number, not unless we've seen the numbers go higher and higher and higher for several weeks. But as of right now, we're just not seeing it. Let's look at technical action now. S&P 500 is now approaching the 200-day moving average. The NASDAQ 100 is still lagging behind, still a little further up. I think we need to see more downside. The put-to-call ratio peaked out at 130 and went lower. I honestly think the market can go a little lower. Here is what I'm happy about. I'm happy about the fact that we're opening lower today. Usually, when the markets are in a downdraft and they open higher, they tend to drift lower as the day goes on. You tend to see capitulation, the end of a down cycle, when the market opens sharply lower and then starts moving higher. I wouldn't be surprised to see the 200-day being hit, but nonetheless, regardless of what you guys are thinking, we're getting close to the bottom. The put-to-call ratio is not going to go a lot higher. It already settled a little lower yesterday, not at 130, but 123. There's a really, really good chance that the market is going to bottom out either before the end of this week or early next week. I'm just not seeing a lot of downside. Especially, let me show you something interesting. I want to show you the gold market. Gold is a safe asset, and right now it's still not trading above the all-time swing high of 159-ish. So again, if gold rallies above 159, we may have a problem. And let's look at the volatility index. Can't even spell correctly this morning. Look at me. Volatility is up. Yeah, volatility took out the high, but again, I like to see it open higher and then close lower. If you look at the volatility levels compared to historic prices, it's not a big, we're right now near the upper end of the range before things really go haywire. So unless there's more negativity in the markets, and I don't know if there will be, but technically, we could find out that there's 100,000 new cases. I mean, I don't know what China's going to tell us. But I'm assuming everything we know is truthful right now. And as things stand right now, the put-to-call ratio, the fact that the S&P is reaching for the 200-day line, the fact that let me show you momentum levels too while I'm at it. I want you guys to have a really good picture of what's going on here. If you look at the overall stock market, it's actually below the 200-day moving average. Only 40 stocks are trading above the 200-day moving average, the overall market. Now, if you look at the S&P 500 from an equal footing, meaning all stocks have an equal footing, you will see that 46%. Now, I want to show you something that I brought to your attention a long time ago, and I'm not going to say, yeah, I'm going to say I told you so. But I told you so. Look, highest momentum levels in 5 years. Pow. Do momentum levels work? Oh, yeah, they do. Look. Down, down. Highest momentum levels in 5 years. And on the NASDAQ, I want to show you this. This is also interesting. Here. Folks, when I show you these numbers, you should pay attention because I warned you this was coming. I told everybody to pay attention to momentum levels. I told you guys that they can't sustain themselves, and they can't. So we went from 85%. Look at the NASDAQ 100. This is the 5 years. Again, we went to the highest level here in January of 2018, and we went down. And again, we're moving down. I still think there's more downside in the tech, which may cause the market to go down. I wouldn't be surprised. Let me show you what I think is going to happen. Here's my theory. We're going to open lower today. Let me make some. I think we're going to go. Let me go to daily. This is weekly. I think we're going to go lower today. We may hit the 200-day moving average. We may go a little bit below the 200-day moving average, and then we're going to start moving higher. I think the weak hands are going to be stopped out at the 200-day moving average, and momentum levels are going to start turning south, and the market will start moving higher unless gold rallies and unless we hear more negative news. But as far as data, global data, not global, as far as U.S. data, it's strong. You got durable goods better than expected. You got GDP on the upper, right at the range. But again, 2% is what the economists are looking at. 2%. Anything above 2% is gravy. And again, jobless claims just a little off. But if you think about it, unemployment's at a 55-year low right now. So this is not a very significant number. The market is being driven by this coronavirus now. And again, folks, don't forget, register for the Blitz trading event today. It's perfect. I mean, this thing is perfect for aggressive traders looking to make triple-digit gains, but don't want to deal with this market uncertainty. You want to get in on Monday, out on Tuesday, in on Tuesday, out on Wednesday, in on Wednesday, out on Thursday, in on Thursday, out on Friday. 24 hours, you're in and out. I love it. I love it. Follow the link below. It's happening at 1 p.m. Eastern time today. You don't want to miss this. Folks, I've been giving you this market. I've been timing this market like a roadmap for you. I mean, I'm not kidding. I've been telling you that momentum levels are at 5-year highs for 3 weeks now. When I'm telling you about this Blitz trading thing, I'm not kidding. 1 p.m. Eastern time. Do it now. Sign up. You'll regret it if you don't. All right? Talk to you guys soon. Take care.